In this video, guys, I want to differentiate between momentum and exhaustion. Stay tuned. Hey guys, welcome to, momentum versus exhaustion, because they can look similar, right? You know, if you look at it just objectively, like, well, big move, volume, that's the same attributes of momentum exhaustion. I talk about momentum ignition a lot as a very, very key trading strategy. You know, I use it daily, almost daily. I don't trade every single day, but I use it regularly. And exhaustion as well, of kind of timing when the end of the move is happening, or if you're going to start hitting some bids, or if you can take some off the table. But they can look very similar. So what are the main attributes? Now, if you step back and you look at the bigger picture, that's when things become a little bit clearer. When you're right in the microscope, you're like, well, I see a big bar, I see a lot of volume. That could be momentum, could be ignition, or momentum ignition could be exhaustion. Quite right. Quite right. It's stepping back, and you know, I'm a big advocate of stepping back and looking at the bigger picture, looking at price position, looking at this, looking at the other. So anyway, jumping the gun a bit. First thing is price response. So actually, you know what? That's not the first thing. Let's move that down here and talk about that at the end. I think that's something to talk about at the end of it. Number one, number two, number three, length of drive, duration of drive, strength of drive. So with a momentum type trade, you want to see, you know, the start of a move. We don't want to get on a move after it's already done the meat of it. That's not what we're trying to do. And stuff I kind of teach, you know, momentum ignition is what is the precursor for the big move. That's the real sweet spot. That's where the money's made, is spotting that, one of the clues that it's about to take off. Not being behind the curve like everyone else and scanning through stuff and going, oh, that's moved. Yeah, great, we know that's moved, but the point is, how do we get on it as soon as we possibly can? Not always the case. I've got a crystal ball, but we're trying to spot these little telltale signs of the start of a spark before it really starts to get going. Anyway, you know, if you are looking at exhaustion, it's going to have already done the move. The length of the drive is going to be significant. The duration of the drive might be significant. The strength of the drive, which is kind of the volume and how the volume, interacts with the price, and the steepness, the angle of the drive as well. You know, so all those parameters that we just our eyeball and say, hey, this has gone a long way, very, very strongly, and I'm seeing a big move with volume at the end. That's probably likely to be more an exhaustion move than a momentum type move. The beginning of it shows momentum, but on the last candle, that's more that exhaustion type, last flush, everyone's got to get in, look around, no more buyers, bang, that's the exhaustion move, bang, pull back. You're taking the pullback to mean, if you're brave, looking for a full reversal, depending on the market you're in. And that's about grading the trade. Talk about that quite a lot. So those are the three kind of big parameters there from a kind of operational perspective. Then we've got price position. So where is price? You know, often, you know, momentum ignition is the start of something exciting, the new high. There's a catalyst from earnings, there's a catalyst from Fed, catalyst from a jobs report if you're trading currency. There's a catalyst that just starts things going, and it's just like, you know, just putting a match under that rocket, and it's just going, just fizzing and just wanting to go. And we're looking for that point of it. And that happens very often at a technical level. You know, you're not going to get exhaustion. Listen, I don't like being broad with stuff, guys, because market does whatever the heck it wants to do. But you're not going to likely get exhaustion, you know, at a key level. Exhaustion is in fresh territory, new highs, new lows. You know, everyone's kind of running, flapping around, going, I want to buy it, I want to sell it. That's exhaustion. You know, momentum ignition is normally, it's in an area of interest, consolidation area, range area, a little kind of all-time high or trend line break, something, and it's just like fizzing, bubbling, just wanting to go. The volume's picking up a little bit. Maybe it's put a strong bar in and a doji, and it's like, you know what I'm talking about, guys. I'm trying to, you know, you can just feel that it's there, and it's wanting to brew and wanting to pop, and there's just something holding it down, and that hand of selling just lifts out of the way. I think it's going to rock it. So the price position is super key and super important. You know, where it is in the structure of the higher time frame. You know, are you in a downtrend? It's breaking the downtrend. Is at all-time highs in this? And it's very different from something that's already moved and is in fresh territory that's been there for a long period of time, and it's been kind of well known for such a long period of time as well. Key thing that. And then the last one is price response. So this is maybe a little bit later, but how does price respond to the move? And I know some of you are like, well, this is a bit of a hindsight thing, and to a certain extent, yes, I give you that, and we've got to be careful we don't have hindsight bias on stuff. But And if the price goes and it's early in the move, so you combine all these things, and then it holds there. And it depends on the time frame you're trading, of course, and we can't wait for too much confirmation because we're just like, well, oh yeah, well, of course it's held there, but I'm too late to the party. But you just want to, the key here, guys, with any price action type trading is to really be as early as you can to a move without guessing. So the later we are to a move, the less likely it's going to work. All these confirmation, this, and then this, you know, under most conditions, you're too late. The move's gone. There might be a little bit of juice left in it, but that's not going to repeat itself time and time again. You know, we want to identify as soon as possible the trigger, the start of a move. And if we can get better at that, that opens up a whole new door of profitability, opens up a whole new door of trading strategy and style and setup. And so we're looking at price responses. How early can we spot and look at the response to something, the fizzing of the rocket, to go back to that analogy? How early can we go, hey, price looks like it's ready to go. That is held. That's a 1 day break and a daily chart. It's held, there's volume, it's above high, and it's held. That could be the start of a multi-day break, multi-month break. Fine. You know, that's the key for momentum ignition. Exhaustion would be you've had those multiple day moves and then it kind of the next day, shoom, rejects straight away. You know, that's the kind of thing. Now, again, going back to the initial point, to a certain extent, the move's gone and it's very, very clear to see exhaustion after the move. Well, look at that, it's exhaustion. Am I a great trader? No. I'm gonna get paid for looking at charts after the fact and going, hey, that was exhaustion, great. We get paid for spotting it just before it's about to happen. Too early in exhaustion, you get your face chewed straight off because you're short and it goes another 3 days and off you go, goodbye, you've lost. It's waiting for that sweet spot and say, okay, we're in the zone now of exhaustion. We look like we're about to flush. One more. You see it, you feel it, bang, it goes. And the response to that feeling of you think that it's the end of the move is one of certain rejection. You're on the short side, you're in, and most of the time, if you're nailing that exhaustion sweet spot, very, very quick profit, scale out quickly, get some risk off the table because you're going against the trend. Sometimes it snaps back on you. Exhaustion doesn't mean reversal. Exhaustion means that's the end of that little move. It can mean full scale reversal, but very often it's a big retracement and you're trading into that, scaling off into those lows, and then you look for another leg rather than the full scale reversal. But anyway, I'm digressing. You can see, guys, I like this kind of stuff because this is really, to me, where my edge lies, to be frank. But you know, I think there's something where we as retail traders can really compete. We really can get stuck into this nuances of momentum ignition, exhaustion, and really work out, hey, how does this apply to my time frame? How does this apply to my market? How can I get better at spotting these moves as early as possible, reducing my risk, maximizing my risk reward ratio, maximizing my hit rate, and all those things that we combine to try to get the best possible chance and the best possible profit from the deal. Anyway, guys, that is momentum versus exhaustion. I hope that's helped. See you next one. Take care. Bye-bye.